process and this understanding process has gone so far that I'm quite confident that we probably next year will be more talking about which platforms are now in the lead in the regulated space because the institutionals are adopting so fast.
Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, we're going to be discussing the topic of, are we about to experience the cryptocurrency market completely decoupling from traditional risk asset classes? With that being said, if you enjoy these videos, smash that thumbs up button and subscribe. We do appreciate the love and the support. It does help this platform grow, and it does boost the algorithm, pushing these videos out to more individuals like yourselves. I know that you all get tired of hearing it. I get tired of saying it, but it does really, truly mean a lot if you would smash that thumbs up button. So we're actually going to start, aside from playing this video clip real quick, just covering some fundamental factors to be paying attention to, okay? Now, in a video that we posted on the YouTube platform, hopefully you guys are paying attention. What we talked about was paying attention to the strength of the US dollar. We talked about the potential of the rate cut narrative fading out of the market, bringing strength back to the US dollar due to increased inflation and robust labor market data. Okay, so now 24 hours after posting that video breakdown, what have we seen in the past trading session? January 2nd, 2024. Dollar starts the 2024 year strong, and it should get a seasonality boost. The dollar has started 2024 off strong, suffering its worst yearly performance in 3 years in 2023. And seasonality as well as oversold conditions could help the greenback near term. So again, always trying to keep you guys ahead of the curve. These fundamental factors are coming out after our video breakdowns, trying to keep you guys in the loop as to what you should be paying attention to. Now, albeit I haven't really seen a massive pullback in the cryptocurrency asset class as a risk asset with the increased strength of the dollar. But today we did see a pullback in stock markets, and we did see a decline in the price of trading pairs like Euro USD and GBP USD. So this fundamental piece goes on to read: stocks on Wall Street in Europe fell on Tuesday, along with prices for the US and other government debt, as market optimism that the Federal Reserve will cut interest rates sharply this year faded. So remember, in yesterday's video breakdown, we said to be paying attention to this as a potential outcome for Q1 and Q2 2024. The dollar jumped against major currencies as the yield on the 10-year Treasury note rebounded to trade above 4% at one point. The dollar strengthened because its recent sell-off was overdone, while the unemployment report for December this Friday will show a still robust U.S. labor market, said Mark Chandler, chief market strategist at Bannock Byrne Global Forex in New York. So we had been telling you guys to be paying attention to this. Here's another article that talks about the US dollar starting the year on a strong note amid risk-off flows. The US dollar began trading at the 102.10, marking a noteworthy rise in the index. Now down here, it goes on to talk about, despite an indicative 75 basis point easing forecast, future actions may alter with incoming data, such as the imminent December labor report. So in yesterday's video breakdown, we told you guys to be paying attention to these reports and that they could potentially bring strength back to the dollar if they are seen as robust or optimistic for the US labor market. So in focus tomorrow, if you're watching this video breakdown, again, consider your personal portfolio, whether you're a stock trader, a forex trader, or a crypto trader, where you're going to potentially be plugging capital into this market if the dollar does start to increase in value, okay? Because obviously, of course, what would that do? Create a temporary pullback in riskier assets. Now, I want to talk about that in the cryptocurrency market because of what it is that I'm seeing and what it is that I'm going to play for you guys. And again, this is all speculation. It could or could not happen, but I have a firm belief that we are on the verge at some point in time in the near future of experiencing a decoupling of the cryptocurrency market from the macro backdrop because of the demand that we are set to experience via institutions onboarding themselves into this space, Bitcoin spot ETFs getting approved, utility and use case actually being utilized. We'll talk about that in just one second. But tomorrow, Wednesday, Thursday, and Friday, we have JOLTS job openings set to come out with a slight increase from previous readings. Then on Thursday, we have the non-farm employment change, also set to come out with a slight increase from previous readings. Then the unemployment claims set to come out with a slight decrease from previous readings. So far, it's looking as if all of these data reports from the US labor market are set to come out a little bit upbeat or robust, which could potentially drive strength back to the dollar temporarily. Now, that is not potentially to be seen as a bad thing. I talked to you guys about that in a previous video breakdown. Any discounted or pullback opportunities in the cryptocurrency asset class, we here at CYPRX will be seeing that as a buying opportunity. So, in my personal opinion, again, remember pullbacks in the cryptocurrency market are healthy. Looking into Friday, okay, we also have non-farm employment change, and then we have unemployment rates. So, be paying attention to these fundamental factors. Remember, we talked about in yesterday's video breakdown. If we just go over to the dollar, remember we mentioned that we need to stay below the 102.800 to see a increase in risk assets like stocks and crypto. If we break back above that 102.800, in my personal opinion, that is going to be bad for the risk asset classes as a whole. What we would like to see is we would like to see maybe some potential optimism in the labor market come out, right? Pushing us back into that 102.800, and then a failure to break the 102.800 in the following week. Maybe we see some lower inflation data that pushes the dollar back down towards the 98.300, driving strength back to risk assets and continuing this rate cut narrative from the Federal Reserve. This is what I would like to see. Inversely, if the opposite happens and we get robust labor market data and higher inflation readings with the rate cut narrative fading out of the market, maybe a potential hawkish Federal Reserve perspective stating things that rate hikes may potentially be back on the table due to robust labor market data and higher inflation readings, and we see a break above 102.800, a retest, and a continuational move higher. As risk asset investors, we need to just be prepared for that and position ourselves accordingly. Historically speaking, remember in previous bull market cycles, getting a retest of the 102.800 or creating a lower high after breaking that significant psychological level is not a bad thing. So if we do see a retest and strength drive back to the dollar, as long as we remain below psychological levels like the 104.00, where this lower high comes into fruition, or maybe even potentially the 105 to 106, as long as we're not breaking this previous high here and we're just creating a steep pullback on the dollar before heading lower, in my personal opinion, I don't see that as a bad thing. So just be reactive, because if we do see dollar strength on risk assets, that could be seen as a pullback buying opportunity for some altcoins. I'm going to play this video clip. Shout out to ISO 222. Let's do it on the X space. This gentleman puts out phenomenal information. I'm going to play this video clip real quick from CNBC. Take a second and listen, and then let's jump in and talk about this whole entire narrative of the cryptocurrency market decoupling from other risk asset classes.
So this Bitcoin ETF, spot ETF for the U.S. markets, really as foundational and as big a deal as people are making it out to be. It's a structural market change for this asset class that's coming into its being. The noise and chatter around sort of this approval is certainly intensifying, and we'll see how things play out. But the way we see it is that there's going to be secular demand and funds flows that are going to be coming into this asset class and this asset in particular. And then when you couple that with the halving that's coming up, which will reduce the block subsidy that's on the supply side by half, those two factors will, I think, combine together to be pretty explosive.
Now, something I want you all to take into consideration is, are we really about to experience a hockey stick-like price appreciation in the digital asset space? Is it really too far-fetched to believe that that could potentially happen? If we just go look at the stock market, and we'll just use Amazon as an example, and we go to the monthly chart, okay? You can see that back in the early days of the stock market, let's just go back to 2008 as an example. Once mass adoption started to kick in, we experienced this rising equity curve in the stock market, and prices most likely will never, ever go back to, let's just say, Amazon stock, $4 per share, just using this as an example. Are we set to experience something like this in the cryptocurrency asset class? In my personal opinion, we are.
I think once they are rubber stamped by compliance internally at those sorts of institutions, the genuine volumes you could see could very much be like a hockey stick. And so I think the native cryptocurrency market is obviously there's been the rally over the last few days, but sort of hovering around 1 trillion. I think you'll quickly see the market cap of, say, tokenized securities, tokenized cash, surpass that pretty quickly over the sort of next 3, 4, 5 years.
So when I'm talking about this rate cut narrative and the strength of the US dollar in the short term, again, you all have to remember that I am a forex trader. So this stuff matters to me in the form of intraday trades. But when it comes to the cryptocurrency asset class as a whole, I have a firm belief that we are on the brink of experiencing some type of hockey stick-like projection if these Bitcoin ETFs get approved, along with regulatory clarity and vast amounts of institutions, hedge funds, and asset managers, along with private wealthy family offices onboarding themselves into this digital asset space. So when I'm talking about the intraday strength of the dollar in the short term, again, taking in consideration that I have a firm belief that we are on the brink of experiencing mass adoption in the digital asset space. So play your cards accordingly. This is not financial advice, and I'm not sitting here saying that it's going to happen tomorrow or when the Bitcoin spot ETFs get approved. Hopefully they do on January 10th, albeit some approval dates are pushed all the way back till May of this year. So expect that to come into fruition if the January 10th dates don't get approved. Remember that eventually they will get approved. And eventually we will go into a phase in this digital asset space where you're going to be saying to yourself or other investors, did you get in before institutions came in or after institutions came in? And this, just using Amazon stock as an example, is most likely what the market is going to look like in the digital asset space on certain digital assets, not all of them, on certain digital assets after institutions flood in. So again, play your cards accordingly. We know that the digital asset space as a whole is a very low liquid market. Once massive amounts of liquidity come into this market with less supply and more demand, you do not need a college degree to understand what is going to happen to this digital asset space.
But it will come eventually, and nobody really, that's what I also agree. Nobody really understands what will happen, because you think about the pension funds. They're just exactly as Sven described. And once they are getting in, it's like we will have a bottleneck which is like which is unprecedented, because they all want to go through that door. And then you're hitting a market where there is basically very, very low liquidity. And then we all know what happens when you have less supply but a lot of demand. So the price eventually will go up.
And we are, if not weeks away or days away, only months away from experiencing this type of volatility in the market. Now, I'm not going to sit here and say that this is what the market's going to look like. If you zoom out, obviously, of course, this is years of price appreciation, but in the digital asset space, could we potentially be entering into a multi-year bull market cycle where the digital asset space decouples from the macro environment? Even if we do see strength in the dollar, even if we do see risk off market mood in stocks, will the digital asset space continue to increase in value? In my personal opinion, because of institutions left, right, onboarding themselves into the space, especially if we get regulatory clarity, it's most likely going to be the case. Again, it is all speculation. I'm obviously, of course, making sure that I play my cards right, where if we do see pullbacks, I start to take profit, re-implement capital in a strategic manner. But once you zoom out, in my personal opinion, 3, 4, 5 years from now, this is what the digital asset space is going to look like. Just like the stock market appreciated in value significantly from the year 2008 till now, we are set to experience some type of price action like this in the digital asset landscape between now and 2026. With that being said, many blessings to you guys. Be cognizant, be aware out there, stay attentive to these data releases, the strength of the dollar, risk on, risk off sentiment, and the potential outcome of the spot Bitcoin ETFs, either getting approved or not getting approved. Always be reactive to market fundamentals. Do not marry a bias, and be able to react to fundamental data as it comes out. Many blessings to you guys. Be cognizant, be aware out there, and I'll see you all in the next video breakdown.